Hi guys, it's Marissa here and hope that you're all enjoying the first few weeks of 2020, and I hope that you've got your goals set and planned out and written down for this year so that you're set up to achieve greatness this year. Today I wanted to check in because I have been getting a lot of questions around the topic of rental yield versus capital growth prospects. A lot of them stem from a Facebook Live that I did with the property professor before Christmas. Many of you might have remembered this, but this was where Peter, the property professor, said that he prefers to invest in blue chip suburbs that have probably a smaller land amount, but a more beautiful house in a more beautiful area, and he called it gentrification, where he believed was more higher capital growth prospects. Now, I guess this has probably got a lot of you sort of thinking, is this the right strategy? A lot of you might have been thinking that you've got a different strategy of buying larger parcels of land that might be a little bit further out from the city. And I've been getting a lot of questions about this because this is obviously, quite confusing as to which way is the right way. The bottom line is there is no right or wrong way. So for some people, it will be better for them to buy a larger block of land further out from the city that they can add value to, whether it be through subdivision or development or cosmetic renovation, or even if they don't plan to do any of those things, they actually want a larger piece of land because we know that land is what goes up in value. The building is what comes down in value through depreciation. So buying that larger parcel of land definitely still is a great strategy. So basically, if you had $300,000 to spend on an investment property and you had a choice between buying something closer to the city, which was a little townhouse on a very small block, versus buying a larger block of land that did have subdivision potential in the future, a few kilometres further out from the city, which way should you go? Well, there is no right or wrong answer, but what you do need to consider is you do need to consider your holding costs, because your holding cost is something that you can work out and calculate today, and you know that they are pretty much what they're going to be. So you can work out what you're going to get for rental income, you can work out what that property is going to cost you to hold, and you can work out if you can actually afford to hold this property long enough to realise the capital benefit. Ultimately, all properties in metropolitan suburbs increase in value in the long term. It's just a matter of being able to afford to hold the property long enough to realise its capital growth potential. So that basically means that you really need to understand your out-of-pocket costs. So in the case of the $300,000 that we might spend on a smaller property closer to the city that's a townhouse, the reality is that you might end up getting a lower rental return for that property than you might get for a property that's further out with a larger land size. Furthermore, with a larger land size, you do have the opportunity to add value to it and manufacture your own equity growth outside of market movements. Now, of course, to do this, you have to want to be willing to take that extra additional risk and have some experience behind you, or make sure you've got the right team of people supporting you to ensure that you can achieve that equity growth project profitably without overcapitalizing or wasting money unnecessarily, but it is possible. So I guess the bottom line is there really is no right or wrong answer. There are different strategies that suit different people. For some people, buying smaller blocks of land in more blue chip suburbs is the way that they want to go because they can afford that little bit of extra out-of-pocket cost, and they don't have any intention or interest in adding value to the property outside of market movements. For other people, much like myself, I've very much been an investor that has always looked for property and land that actually does have the potential to add additional value, where I can manufacture my own equity growth. So that has definitely helped me to build my property portfolio, but that strategy is not for everybody. So the bottom line is having to work out what strategy is the right strategy for you at the stage of the property cycle that you're in. And as your property journey progresses, you may find that you actually will your strategy might evolve. So from, investing in one type of strategy, you might find that your strategy will evolve over time, and that's fine as well. It's about matching the strategy to where you're at in your life, in your property journey, and in achieving your long-term goals. Thanks so much for tuning in. I can see Craig and Amanda online. Thanks for tuning in, guys, and we will see you again soon. Good luck with your goals this year for 2020. I am here to help, so reach out if you need any help, and make sure you get in touch if there is anything we can do to help you with your property finance or money goals in 2020, because I want nothing more than for you guys to absolutely smash it this year and achieve everything you dream of. Have a great day. Bye.